Welcome, Harald. Thanks a lot for being with me for this interview on the grand questions of the energy transition, climate change, and how Bitcoin fits in all of this, which to many people is a contradiction in itself. And I think that's probably one of the last critical points an investor looks at if he's interested in Bitcoin. So let's maybe start, because it's a complex topic. We try not to speak for half a day. Let me, coming from an idea from another podcast, which I did in German, let me shoot a few simple, quote unquote, yes, no questions. And let's see where we take it from there. All right. So first question, is climate change real?
100%.
Is global warming caused by humans?
Predominantly, yes.
Are we as humanity using too much energy?
No, we're using too little.
In the way we combat climate change, are we effective today?
Absolutely not.
Is Bitcoin a waste of energy?
Not at all.
Bitcoin, is it an environmental disaster?
It's exactly the contrary.
Will Bitcoin contribute to mitigating climate change?
It has an incredible potential to do so, yes.
Wow. So these few yes-no questions will already trigger a lot of people for different reasons, which is great, I think. But let's start with you quickly. Why are you qualified to talk about these very controversial and very difficult, complex issues? What's your background? Why are you talking about these things anyway?
Well, first of all, thank you very much for having me. I think this is an exciting opportunity to talk about, as you said, a very controversial topic, which only looks more controversial than it really is. And I think this is a great moment in time where there's a lot of sensitivity in terms of a perceived and real threat in terms of climate change. But there's also a platform for looking at different ways of how we can deal with this problem and this challenge, because ultimately what we want to have a regenerative and a sustainable future for us as humanity on this planet. Yeah. So thank you very much for that opportunity. Why am I qualified? I don't know whether I'm qualified, but I'll give you a bit of a background of how and why I find myself in this space. So my background is in natural science, so I hold a PhD in biochemistry. I'm not working in this field, obviously, anymore. But what natural science education gives you is a very analytical way of looking at a problem and the skill set to do so. And I think it comes particularly handy for a very physico-chemical challenge like climate change, because ultimately that is the driver of the phenomenon that we see in the real world. And then for the past almost 10 years now, I have worked in the climate innovation field. I want to qualify that term for a second. So I've been working for an institution which was a subsidiary of the European Commission, which looked at ways of how a regenerative economy and societal fabric can look like to move from a carbon intensive present into a carbon extensive future. So obviously this touches a lot of different dimensions. This touches very much a policy dimension. It touches an innovation dimension. It touches questions around social fabrics, theories of change, and so on and so forth. So I felt very privileged to find myself in this space of climate change and climate change related questions very early on. Things started to change with 2018 when Greta Thunberg started her movements, where it became socialized to a broader public, where from this moment onwards, I did not have to explain anymore what climate innovation and climate change means, because it was in front of everybody from this moment onwards. And if you think about it, it's not that long ago, it's 5-6 years ago, where the sensitization with regards to the problem really started. And now we are scrambling to understand it and find answers to this challenge. And it feels like we're treadmilling on the same spot, and we're losing the ability to have constructive conversations about what does a desirable future actually look like and how can we build it. And then the last piece that is probably missing here is how did I end up in Bitcoin? And the truth is, I came from a very specific angle. I was writing my master's thesis in 2017 for my MBA education, and I was starting to get interested in the question: why is it harder and getting harder and harder for us to organize ourselves in an increasing complexity? Complexity driven through digitization, complexity driven through globalization, and it felt like legacy institutions and the institutional setup that we have built seemed to not be fit for purpose anymore. So I started to dig deep into questions around cybernetics, questions of regulation and self-regulation. And after finishing this work, I really had a good understanding, in my view, of why these legacy institutions are not able to cater to the needs that we will have in the future and already have in the present. And then I had this light bulb moment where I stumbled upon Bitcoin, and I realized this could be actually an instrument, an infrastructure that allows us to build new ways of interaction, new ways of dealing with each other and interacting with each other, be it money or information or knowledge or whatever. And how does this fit into a thesis of moving from a more structurally organized society to a network-based society? And since 2016, 17, I'm negotiating both spaces. I'm 100% convinced that climate change is a real threat to our viability on this planet, and that we need to look very deep and very honest in the way of how we go about the problem, building on institutions that seem not to be fit for the future anymore, and ask ourselves the honest questions of, is this the whole spectrum of possible solutions that we have, or are there more? And I'm advocating for there is much more, and Bitcoin should and can play a prominent part in this conversation of going about the mitigation of climate change in a way that is not oppressive, but empowering, that is not limiting, but enriching, and that ultimately gives us prosperity and abundance, but not in a controlled way, but in an empowered way.
Now, this is a very interesting answer and a position very few people have, right? So what I see from my work is even if people come to the point that they say, yes, Bitcoin seems to be a real thing, it's useful, it has these monetary properties. Your argument is also new in that context and interesting, I think. It will help us to cope with complexity. It's a different peer-to-peer, it's a different approach to complexity. So even if an investor sees this or thinks these are good reasons to invest, they very often get stuck in this energy debate, right? So somebody says Bitcoin uses so much energy. It's a country. You pick a country, and it's really hard to give an answer, a short, concise answer. Maybe it would be a nice goal for this conversation if at the end of it, we could come up with a nice, concise answer that reflects our best thinking about from both worlds, right? From the Bitcoin space and from the energy space. And I thought maybe let's structure this, I think, rather complex discussion in maybe 3 parts, where in the first we would discuss drawing from your expertise and insights from the role of energy in this whole climate change and also climate mitigation field, how energy works, the base loads, the different energy sources, etc. Then the role of Bitcoin mining in general, what makes it unique, because this is the link that, at least from my perspective, I see that people use. It's the Bitcoin mining aspect that has this potential to make positive contributions, which would be the third part of the conversation, which I hope we can dedicate most of our time. So maybe let's just start with this simple question: how is all of this related? Climate change, its mitigation, and this energy question.
And let's maybe start with, I'm a firm proponent of the climate science. We have very sophisticated tools in the meantime that allow us to synthesize various sources of information. We do not need a thermometer to, in a way, interpolate the temperature situation 150,000 years ago. We have very sophisticated tools that help us to print and plot pictures of trajectories, what informs what is dependent on what. And the scientific picture is drawing essentially only leads to one logical conclusion, which is that we through the success story, and we need to call it a success story, of hydrocarbons that have led to an enormous amount of prosperity for human flourishing. We have paid a long-term price by continuously enriching the atmosphere with greenhouse gases. Essentially, greenhouse gases are defined as gases that are able to interact with light and bind essentially heat in a certain confinement. And this confinement, due to the atmospheric conditions, is close to the surface, with all kinds of secondary and tertiary effects, which in the long run will create a lot of problems and already do so. So when we talk about the intersections of problem analysis on the one hand and how we go about mitigation, we need to then ask ourselves, what are the main drivers of this atmospheric enrichment of carbons? And if we look and if we plot that, and that's I recommend everybody listening and reading this to explore those data sets, because they're interesting. And if we look at the distribution, what are the sectors that contribute most to the enrichment of these hydrocarbons in the atmosphere, then we can essentially give or take say that 75% of the emissions that we produce as humanity are related to energy generation or energy consumption. And that could be energy generation in its various forms, in terms of electricity, in terms of heat, but we need also energy for buildings, we need energy for mobility. And if we combine and aggregate all of this together, then we end up with about 75% of emissions in the energy sector. Now, if we want to build a mitigation strategy from there, now you obviously look at those carbon bubbles that contribute most to global warming, and energy is one of them. And if we are very open about the perspective of how we go about it, then essentially all cards are on the table. Yeah, you can say we need, for instance, you can advocate and say, Marcus, you're only allowed to fly once per year. And in order to do so, you have to eat 5 steaks less. That's a very top-down policy related or dependent mitigation strategy. Is it one that is desirable? Personally, I don't think so. I'm looking for ways of how we can achieve the necessary outcomes without sacrificing the values that make our society a desirable society: freedom, privacy, freedom of movement, personal liberties. And Bitcoin, and as you rightfully pointed out, Bitcoin mining, just by chance, has interesting properties that allow those effects come into effect. And I think that we will talk a bit more about this in more detail.
Exactly. I mean, before we make the link to Bitcoin, because in the beginning, in the yes/no questions, you said that the current ways we are trying to mitigate the climate change problem, we are not very effective.
Yes.
Could you elaborate a bit on that?
Yes, 100%.
Because so many people spend so much time, energy, and funding over a long time already.
Yes.
So why we are not that?
Yes. Now we're getting a bit technical, but I think it's worth it. So when we talk about the what are we observing? There's a whole bunch of scientists that look into the what, into the physical chemical relationships and effects of atmospheric composition, let's say, and how it has changed over time and what we can expect in terms of consequences. Then there is another group of people that essentially is busy with thinking about how do we now go about this. So we have the what and we have the so what. What are we doing now with this information? And the more I dig deep in understanding the thinking and rationales and decisions that these groups have taken over time, you realize, and you start to realize, that they're not only scientifically driven, they are also politically driven. Well, obviously, we talk about essentially custodians to governments. So they are in a way not free in terms of the UN. They are not free in their freedom of movement and decision making, because ultimately they are funded by governments that pursue their own interests. Yeah. So inevitably, all decisions that are taken there are sort of also politically informed. And if we now look at the different decisions that have been taken over time in which mitigation strategies are desirable and which mitigation strategies are less desirable, we see to a certain extent a political influence in those decisions. Yeah, I want to give you an example. For instance, there has been a Nature paper from the ETH in Zurich, which has studied alternative mitigation pathways and has found that, for instance, degrowth scenarios. So we grow less. We need to consume less. It's very much the degrowth movement. I don't want to put this into any connotation. And they found out that if we would adopt a degrowth strategy, for instance, we would very likely achieve 1.5 degree compliant outcomes, but they are not considered because they are politically not feasible. And so
why are they not feasible?
Well, because if you're a government and you now have to give a speech on Saturday afternoon or Saturday evening in prime time and say you are now allowed to travel less, to eat less, to move less, to spend less, I think it's a bit of a hard sell. Mm-hmm. And so the political viability informs the decision-making of which mitigation pathways are viable and which are not. And so I think once we approach this from an apolitical perspective, an entirely new spectrum opens up, namely those where I can say, well, I am looking less in terms of I'm looking at mitigation scenario less from a lens of political viability. I, as Harald, as a Bitcoiner, climate conscious person, and an investor, I'm looking at it from what brings me an impact, a climate impact, but also the possibility of economic return. And so suddenly we can start to discuss new mitigation pathways that have not been considered and we have been socialized to not think about, because nobody digs deep into these literatures and decision makings of the past 40 years, and understandably so. But I think it's our responsibility as people who are in privileged position to look at those cracks and those decisions, re-examine them and ask, were they good, were they right? And maybe they were right at the time, but now we have better instruments to go back, revisit and say, but actually now we have the tools to think about alternative mitigation pathways. And what I'm a proponent of is to say we need to look at alternative mitigation pathways that are assuming boundary conditions, which are geopolitical boundary conditions that states are not necessarily each other's friends. So we call that geopolitically competitive scenarios instead of geopolitical cooperative scenarios. Yeah.
So are you saying that this idea, which at first sounds very logical, the international community has to come together and cooperate and discuss and find solutions together and compromise, and maybe I have to restrict something in my country so that my partner in the conversation also restricts something in their country, so we achieve a common goal. So are you saying this basic assumption of this will to cooperate is the problem? Yes,
because it is not real, and we see the consensus, the cooperative consensus, eroding over time, and we see and the IPCC, so the Intergovernmental Panel for Climate Change, has terminologies for these realms. So the cooperative world is called SSP1. So it refers to shared socioeconomic pathways. So it assumes certain cooperative and collaborative boundary conditions. And on the other end of the spectrum, you have competitive scenarios, which is called the SSP3, so shared socioeconomic pathway number 3, which assumes that states are more or less egocentric, egoistic, sacrifice long-term goals for short-term survival, emphasize on energy, defense, and deprioritize education and empowerment. Does that sound familiar? Yes, it does. And so we also need to see the geopolitical realities evolving and what potentially has worked for in 2015 during the signing of a Paris Agreement might not necessarily apply in 2023 for different kinds of reasons. Definitely cost of capital is playing a role in this. If you can print your way out of problems, then you can avoid and procrastinate the resolution of conflicts that are underneath the surface already there. So I think what we need is a more robust pathway that works in cooperative scenarios, but also works in competitive scenario. And Bitcoin is one of its beautiful features is that it incentivizes, you have written this article, for friends and foes. It is for everybody, but nobody can hijack the system. So as a social infrastructure, it works in incentive-driven, in competitive environments. We see the game theory playing out both on the individual level, but also now starting on the states level, on the institutional level. Who comes first? Who feels the pressure to come in first? Who needs to have and secure a part for himself or herself in a network? So we see this whole game theory playing out, but the Bitcoin network then coordinates like a magnet. It coordinates those actions into certain outcomes. And the irony is that Bitcoin has, and I would assume that, and I would hypothesize that it has never been intentionally designed to create climate positive outcomes. Mm-hmm. But it does, and you cannot change it. If you believe in climate change or if you don't believe in climate change, it doesn't matter. By investing and saving in Bitcoin, by contributing in one way or another in a network, you create net positive outcomes, both for society and for the climate. And I think we will dig a bit deeper into that.
That's really an astonishing statement to which many people would shake their heads, I guess. So maybe let's dig into that question a bit deeper. You mentioned Bitcoin's uniqueness already, but let's elaborate a bit more. I mean, I guess it's all revolving around this Bitcoin mining process, right? Mm-hmm. This process of processing transactions and rewarding miners and spending a lot of energy in the process, which I usually argue for the security of the network.
Yeah.
But yeah, let's dig into that. What makes Bitcoin mining so special that it's actually as you put it, the reversal, it's like upside down.
Yeah.
So
yeah.
What's special about the Bitcoin mining energy link or dynamic compared to, I mean, in context of the energy and climate change discussion, which makes it such an interesting, I don't know, phenomenon to
Yeah. I mean, there are a lot of very beautiful innovations in the Bitcoin protocol. The economics and the immutable economics is something very, very powerful. And I think that sort of leads to very net positive social outcomes, where cooperation is rewarded in an inelastic supply. Your win is my win. And so inelasticity rewards cooperation. So economics is something extremely powerful. But you were asking me about the mining, and I think this is an important conversation, because I think the real innovation happened in a combination of how the Bitcoin protocol has been designed, plus proof of work, plus the difficulty adjustment. So those two, difficulty adjustment and protocol design, are the two key innovation elements, and they sort of create all of these positive externalities that we're talking about here. What do I mean? We know we are now approaching every 4 years, roughly, we're approaching a halving, which essentially limits represents the issuance schedule. And we know that whatever you do as a miner, your block reward will be cut in half. And that, of course, puts a lot of pressure on your operations and your economics as well. But at the same time, we have a difficulty adjustment. We adjust more flexibly every 2 weeks in terms of how much hash power is actually in the system. And I think to really understand the dynamic of how this has been playing out, we need to go back. We need to go back before we go into the different arguments and back to the days when difficulty adjustment was low, energy was abundant, energy price was not really an issue. You plugged in your GPU, you mined, you had a lot of wealth. But the problem is a lot of people thought the same thing. Now, what happened? The difficulty adjustment went skyrocketed, and we know that it skyrocketed. And suddenly a very interesting dynamic came to play, because mining is designed to be expensive from the start through the machines that you need to deploy in order to be competitive in the race. But also, and this is the main determinant, the operational costs under which you can run your machines. Now, I know that there's a big argument out there that mining uses an enormous amount of energy, same amount as Argentina. I don't know what the country comparison is at the moment, but these absolute numbers are absolutely useless and they're misleading, and I will tell you why. The reason these numbers are irrelevant is you need to examine and ask yourself, where is this energy coming from? And miners might have consumed energy in the past that was competing with your toaster, when sort of the operational costs for the kilowatt hour were essentially on par. Well, then you can decide, do I use a toaster or do I use my miner? And then you will say rightfully, as an incentive-driven individual, well, it depends whether I want to save or whether I want to toast. Yeah. But let's fast forward. Difficulty adjustment raises, block reward gets down, and suddenly the economics change and your incentive structure changes, because now suddenly you deploy this amount of energy as an input, but you get way too little Bitcoin out of it to be economically viable. So you go for the toaster, and you're very right. But you still want to mine. You still want to save. So what's the next logical step that you do? You ask yourself, what is the next most accessible, non-competing, non-demand competing energy source that I can tap into that the toaster can't use?
So let's stop here for a second. So are you saying that the opinion of many people that the amount Bitcoin uses in terms of energy is or is not taken away from other people who would need it?
It is not. It is not taken away from other
competing
people.
Actually with.
Yes. Because the more difficulty adjustment raises, the lower the block reward gets, the more and miner capex sort of is a bit of an inelastic value. Yeah. So it is more or less, it averages at a very reasonable price for different reasons. So the variable that you really can influence is the operational cost of your energy, which determines your profitability.
So miners looking for the cheapest form of energy.
Exactly. And once we understand that, we can have a really, really fantastic environmental conversation, because now we shift the gears and now we look into the design of energy systems. And our energy systems are usually designed in a way that they are very centralized. Yeah, a few big actors, because that reduces the complexity so that we can better manage grid stability. Yeah, grid stability translates into reliability, and all incentive structures in an energy system are designed towards reliability. Yeah, so costs don't really matter. The reliability that matters. But what we have seen through the past 15 years is that there is a new game in town, which is called renewable energies. And we have seen the price deflation of photovoltaics, for instance. And we have seen the efficiency gains in wind. So there's a lot of wind. There's a lot of PV that is now cheap and accessible and allows you to produce and generate the kilowatt hour of power for less marginal costs than with legacy system. Think about if you take oil, for example, you need to dig deeper, you need to build more complex infrastructures, you need to transport it, you need to refine it, you need to transport it again, you need to store it. And that all adds to the marginal cost of the kilowatt hour that you can produce out of it. So we see now this divergence between cost depreciation for renewables and cost increase and appreciation for fossil fuel based energy.
Can we, based on this insight, claim, or is the claim correct, that Bitcoin mining fosters or pushes renewable energy sources because they are cheaper?
And that's one part of the equation. And I think this is where I want to dissect a little the different arguments that could come up. And this is in first instance, that's an observation. So the marginal cost of production for a kilowatt hour out of fossil fuel based or fossil energy sources gets more expensive. Renewables gets cheaper. Now, this is a good observation. The second one that we need to take into account here is, however, and that's an argument that is brought up very broadly, and rightfully so, by the way, there's a big advantage of this expensive energy that fossil fuels and natural gas can provide. It's so-called baseload energy. So it is continuously available. And we need this because if we are only in variable energy sources, then this generates a lot of problems to stabilize energy systems again. So fossil fuels have a very important role to play to provide the baseload energy that is necessary for a system to work. Now, and that's one of the major arguments against renewables, because obviously you need wind to produce wind energy. You need sun to produce sun energy. But what we also see is that we have now a dilemma. We have energy generating infrastructure that gets cheaper and cheaper and cheaper and cheaper. And people and institutions want this energy, not because it's environmentally friendly. Nobody cares. It's incentive driven. It's economically driven that on your property in Switzerland, in Germany, in the Netherlands, you can have power, sovereign power, based on those renewable energy sources that gets cheaper and cheaper and cheaper. Yet we have this problem that it is an intermittent energy source. Yeah.
Let me have a quick follow-up before you continue. Yes. So the dilemma is the renewables are becoming more and more the cheaper form of energy compared to fossil, and that's also good because we want that to mitigate climate change and all these positive things. But we have the problem that they are not providing this baseload, as you said, because the sun doesn't shine all the time and the wind doesn't blow all the time. Does that mean there is a natural limit to how many percent renewables we can have in the entire?
That's a very good question. And the answer is yes and no. Because one thing that we need to be willing to do is to also think how this dynamic plays out over time. And if you are now someone, let's assume you're a miner, and you now identify that there is a lot of intermittent energy that, for instance, the grid says, I cannot use because I cannot handle the variability. Yeah, we see that. The UK has currently about 100 gigawatts of wind energy infrastructure, which is not online on the grid because the grid infrastructure is not able to handle it. Now, someone has incentivized building those infrastructures out. A pension fund that you and I are insured with is holding those projects on the balance sheet, but it's producing zero economic value. That's a problem. And it's not only a problem in the now, but it's also a problem for follow-up projects. And what we have seen is 2-3 months ago, because this is nationalized infrastructure, so like with bonds, the government issues bidding competitions for those infrastructures. And what happened that they did not find for the new wind infrastructures, they did not find any investors anymore because they were not willing to accept the minimal cost for the kilowatt hours, given the project risk, given the project costs. And so
are you saying that the transition to renewables is hindered by economics?
Yes, 100%. Yeah. And so and for photovoltaic, we have the same situation. The problem is that if we have an enormous amount of photovoltaic infrastructure in Europe, and the problem is that in Europe, more or less, the sun shines at the same time. So that means we have a surplus of generation all at the same time, which coincides around lunchtime with the time where the demand is the least. Yeah, because we're at work. We're not consuming. We're not watching television. We're not driving our toaster. And so on and so forth. So morning and evening are high demand. Lunch time is high supply. So there's a demand-supply mismatch, which leads, and first law of thermodynamics, energy cannot be destroyed. It can only be converted. So if this energy is here, and if this energy at lunchtime is produced and generated, it needs to be demanded. And what is the only variable that you can, if you can't bend physics, what is it that you can shift as a variable? It's the economics. If I hold a hot potato in my hand and I ask you to hold this hot potato for me, and I say, but I want 20 cents for it, you will say, no, I'm not taking the hot potato. But then we will come to a bargain and I will say, Marcus, take the hot potato, but I give you 20 cents. And then he will say, no, I will not give you 20. I will not take it. How about 100 cents? Okay, I'll take it for 100. So I have the costs of generation, but I also have the costs of distribution, which it's called the self-cannibalization. So that puts a natural limit to the scalability of the rollout and deployment of renewable infrastructures. And here, this is where Bitcoin mining comes in. Yeah, because I'm a natural scientist by training, so I like to compare it to the real physical world. And for me, miners are like mushrooms. If you have a hostile environment, the first species that comes to pioneer this environment, this hostile environment, are mushrooms and algae. Now they prepare the ground, they make the soil fruitful, they prepare the soil overall so that higher species can come. They live there, but when the higher species dies, in the end, the fungi come in again and regenerate the carbon of the higher species to make it accessible again in the beginning for new life. And so fungi have this enormous role in biology to make carbon cycles really circular and get the most out of the chemical properties of the carbon itself. And miners have the same role in the electricity cycles. They're not competing. They are pioneering, for instance, the wind farms in the UK. But once these wind farms get access to the grid, higher utility purposes will come in. Demand that is willing to pay more than a miner is ever able to pay. So they will marginalize the miner out. And then when, for instance, we have sun in Europe and we have excess of supply, this is where then the miners can come in again and say, you don't have to pay me anything. I don't have to pay you anything. I just take your energy. And it's even more economically viable than any other form of economic action that you could think of.
So if I may rephrase, does that mean the strategy for renewables in connection with Bitcoin mining is to increase the build out much more? So we have much more capacity in renewables. So we sort of, yes, they're still intermittent, but we will raise the entire bar and just have much more capacity at the end.
Yeah.
Because that will help us to have a higher degree of renewables in the overall mix, and still have as little as possible blackouts because the sun doesn't shine.
Yeah. And I think this is where the longitudinal, the temporal component becomes so vital, because we need, and this is contrary to a lot of client narrative as well, we will need less energy in the future. We will need much, 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 much more energy in the future. And if it's only for productive energy, meaning we need more houses, we need more roads, humans consume energy, and we will be more humans, so we will need more energy. The narrative that we will be able to be more people and live off less energy is not a viable one. And so I think we need to ask ourselves the question, well, how much more do we think we actually will need? And that becomes then a question as a function of what you look at. If we want to service all the utility needs in terms of energy of you and I, then we have a different conversation than if we say, how much energy, low carbon electricity do we need if we want to sort of mitigate climate change by, for instance, sucking carbon out of the air again, which is an incredibly energy intensive process to sort of lower the concentration of atmospheric carbon. But let's stay with the first one and only the utility question. And this is an interesting one, because it's not that we will do only with renewable intermittent energy on the grid. We have hydro, we have nuclear, which, by the way, the IPCC sees as an integral technology to climate change mitigation, contrary to what is discussed out there. And I'm pretty convinced that nuclear will, in one way or another, as baseload energy, as the economics becomes clearer, be an integral or play an integral role in climate change mitigation. But the fraction of the intermittent renewable energy will grow, not because we think it's so great, because the economics drives it there. And mining can have a critical role in unlocking the scaling mechanism that keeps the economics and the unit economics and the scalability of the technology linear. Because, the more photovoltaic build out you have, and the more you compete with supply in demand low time zones like noon, for instance, the more obviously the economics will bend and maybe even go back, because some will capitulate and say, this is not a good business. I reject that. Yeah. So what we need to do is we need to find unlocking mechanisms that help us to grow the build out steadily, so that, and Bitcoin mining will and can unlock this. Now, there's an argument to be made, and if I may just add this one piece here, that many people then say, yeah, but why use Bitcoin mining? It's useless. Let's make green hydrogen. And then I'm trying to ask with a counter question, well, have you looked at the economics of how much energy reliability you need? Have you looked at the capex of a green hydrogen plant? Have you looked at the final cost of sales, a ton of green hydrogen? So you will see that the economics doesn't play out. So you need something that is more flexible in terms of demand, when demand is needed, when demand is not needed or can be curtailed at the expense of some other demand, a demand that is flexible enough to co-locate with these sites where the energy is actually generated, where the economics work in small, where they work in big. So, and then once you do this iteration and this examination of the different potential demand species, you will find that there's only one that provides the necessary economics, has the necessary scalability, technological robustness, and incentive structure to make it work. And that's Bitcoin mining. Over time, this will change, because you might then start to co-locate on-demand AI rendering services with this energy. And if you say, Marcus, I want to have this this query rendered in ChatGPT, but I don't mind if it's now or in 5 hours. I just want to have the answer by the evening, but the cost changes for you. And so now it costs you 3 cents. In 5 hours, it costs you nothing. That's desirable. We want Bitcoin mining to come first, pioneer it, but then there should be higher value services that then can be built out on top of it, which marginalize the Bitcoin miners again and forces them, due to difficulty adjustment, decreased block rewards, higher pressure on their operational costs, to seek for new stranded energy, electricity that they can use and put to productivity.
So are you saying, or does this imply that, because now people think, okay, Bitcoin miners go to the places where the energy is cheapest. It's not Switzerland today. It's very different places and difficult places, maybe difficult countries politically, etc., socially. So, but are you saying that based on this approach, a mining facility and an energy provider in this country could work together in an economical way that makes sense?
100%. And, we have now different Vox Populi decisions in Switzerland as well that signal that the population wants to embark on a renewable future in different ways. So the question, how energy reliability and energy abundance can be combined with the challenges of decreasing marginal returns, but intermittent nature of renewables, is the same for Switzerland as it is for any other country. The cool thing is that because the challenges are the same, but because predicaments are a bit different in every country, but we have a protocol that works on one standard globally, we have an enormous richness of learnings of how we can tap into the different questions of how Bitcoin mining can play a role in this build out, and how this pioneering phase of unlocking the economic potential, but then marginalization of Bitcoin miners in favor of better and more competitive demand plays out. We can learn and share knowledge and achieve faster, more robust build outs than if we were to do this alone.
So a consequence of that, in order to make this happen, we would need to reallocate resources like in a very different way. Capital resources, I'm talking about money, investment funds, right? And then maybe you can also talk a little bit about your ideas here and where you want to go with this. Because if that is the path, or if that is a viable path, the investments into the energy / Bitcoin mining domains have to look very different from today, because today they're completely separate. They're even antagonistic. They're seen as on completely different pages. So what do you see here in terms of in investments actually and capital allocation needs?
Yeah, that's a very good question. I think we can build right on what we've just discussed and give very concrete examples. And what we just discussed is essentially Bitcoin miners look for the cheapest source of electricity. And one paradigm shift that has happened over the past two and a half years was to go from stranded electrical energy and arbitrage market inefficiencies in the electricity markets to building economic pathways with stranded chemical energy. So miners were forced to look for non-competitive and non-competing sources of energy. And one source of energy that nobody has ever looked at was, for instance, the methane from landfills, the methane from as a side product of oil and gas production. And we've just vented that methane off into the air because in the classical language, methane is considered waste. As a scientist, I tell you, it's not waste, it's chemically bound energy. Mm-hmm. And you can, in a controlled way, harvest that gas, you can purify it, you can combust it, you can drive a turbine, and you can translate it and transform it into electricity, which you can use for any appliance that you can possibly think of. And then we built the same framework. And then you can say, well, do I want to have a fridge with my meat there? And then you're like, I'm not sure, because I don't know, depending on temperature, how much gas will vent off from a landfill, for instance. It's temperature dependent. It depends on the composition of the feedstock that is chemically transformed, from higher organic components into CH4.
So I have sort of similar fluctuations.
Exactly. You have the same fluctuations. But essentially, Bitcoin miners came there and said, well, I can collocate with a landfill. I can extract that gas relatively easy. I can purify it relatively easy. It's all off the shelf. There's no secret, no magic in there. But I can provide a demand that is flexible enough to use this variable energy when it's available and when it's not, because the economics, again, is driven by the price of electricity. But if my cost of electricity is virtually zero, I don't mind if my miner gets shut off half of the day, because the other half of the day are going to be profitable. Yeah. And there's another argument which I think should not be forgotten. And now, because you have this extremely efficient access to electricity, now you can ask yourself, what else can I reduce? Well, your capex. And then suddenly you are not eyeing at the modern XP21 miner that really rocks, but you are looking at inefficient miners. You look at the old S19s, you look at even older S9s, you get them for free. So suddenly you have reduced your capex to zero. You have almost reduced your OPEX to zero. It doesn't matter whether you mine half a day, 3 hours, or 5 hours. The return and the break even of the capex that you needed to do for the piping and everything that you need to do up front is relatively clear.
So as a side effect, Bitcoin mining gear's life cycle is extended.
Exactly.
Which is another issue, right? E-waste in this space is another issue. So that would address, maybe not completely solve, but address that because we can make use of old mining rigs that we switch off today because of the difficulty and the energy.
Exactly. And then let's look at the environmental side of things. I look at methane only as a miner. I look at methane only from the perspective of chemical energy, which I can translate into sats. But the climate looks at methane as a greenhouse gas, which is 25 to 80 times, depending on the time span you look at it, more potent as a greenhouse gas than CO2. Okay, so by burning one molecule of methane, I have essentially technically eliminated 24 molecules of CO2. Okay, so and this is not only good for the climate, but it also offers new alternative revenue streams by issuing high quality carbon credit certificates. And we will need those. Now, I want to put one disclaimer here, which is really, really important to me. Burning and combusting methane in that approach gives us time, but it does not solve the terminal CO2 problem, which is much harder to solve than just by burning methane and we say, kumbaya, everything is good. It is not. And I think we need to be honest in the conversation to say there is an enormous net positive effect of how miners pivot for ever cheaper ways of generating their sets and creating economic and climate positive impact. But we need to be honest where the limitations of those methods are as well. And I don't think that we will have time to go into the details today, but there's also extremely interesting and encouraging developments that help us to that use Bitcoin as an unlocking mechanism to service the terminal CO2 sequestration as well. And so there are answers to this where also Bitcoin and proof of work have a role to play. But for every approach that we're discussing here, I think we need to be honest about the advantages and honest about the shortfalls. But I just want to give you an extension and an idea of how important that is. One of the biggest threats that we as a society have is that that we come to a methane inflection point where the Earth has warmed enough so that it defrosts the permafrost in the Arctics. Yeah. And just to give you an idea, that is about that these permafrosts, they hold so much soil carbon, which would then also, like a landfill, be anaerobically digested into methane, which will then be just vented into the air. And one of the tipping points is dealing with methane, where we essentially warm the Earth enough so that the permafrosts defrost, and then enormous amounts of methane are emitted into the air. Now, obviously, we need to slow these defrostings, but we are already on a trajectory that we cannot, at least in the short term, revert. But we now have an economically viable approach to say, well, who wants to live and build a business somewhere in the Arctics? But you can have a fully automated mining reactor, which harvests the methane, purifies it, combusts it, and drives economic value and mitigate a climate threat, at least over a certain period of time, and give us more space and time to think about structural ways of how we can mitigate the broader problem of CO2. So it's a very complex conversation, but one of the things that I find so intriguing is that if we accept that climate change is real, if we accept that current politically top-down based approaches are not working anymore because they are building on the wrong premise, and if we understand that if we broaden our lens, there are new available technologies and approaches emerging that honor the first two and really work towards climate impact and economic impact, and Bitcoin is the instrument for that, then we suddenly have what I call an X factor, an unlocking mechanism for climate change mitigation. And that's the story that I want to tell, because this transition capital is anyways there. So what I hypothesize for the near future is, and this is what I'm working on as well, is to build financing vehicles, participation vehicles, or venture capital vehicles that allow capital that understands the theory of change to specifically identify and invest into companies that do exciting stuff with Bitcoin mining, knowing that it will create climate positive outcomes in the end, which I can sort of use for myself economically as well. And suddenly we sort of build a climate change mitigation thesis around Bitcoin. And what really drives it home for me is to think it's language independent, it's jurisdiction independent, it's building on an open monetary layer, which is globally accessible, permissionless, immutable. So my climate change agents, my climate change mitigation agents are the entrepreneurs globally that build on this standard. And suddenly, I'm taking a future trade in terms of capital allocation that is not looking for the crowded trade in terms of the 5th soya milk and the 6th dairy-free milk, because that will not cut it. But by chance, Bitcoin has this ability and these properties to have material impact in the different sectors that matter most for climate change. And it's exponentially growing. So I'm looking at exponential economic return, exponential climate returns. And this is a story that needs to be more socialized and also be told, but also in building bridges to existing institutions and make sure that they understand this value of this infrastructure and this technology and what it can do for the purpose that concerns us all the most.
I mean, that's a really powerful and I dare say hopeful message in a way. So Saylor's Bitcoin is hope statement, which I think his scope is around the monetary properties and inflation and fiat, the fiat system, etc. You just opened up a whole new dimension of hopefulness here, which is really interesting. Let's try to recap. Maybe I have two last questions.
Yes.
A counter check question and a sort of a summarizing questions for investors. So the counter check is, if Bitcoin would not exist today, nothing of it, what would be the solution to the climate change? What could you think
that's a very
do to approach to address?
It's a very powerful question. And for me, it's just in this moment so powerful because I would not know. I would literally not know. Because all the challenges that we see in terms of limitations of build-outs, stranded energies, linearity of value chains is very much linked to the observation that we do not have answers for these things. And by now knowing that we have this language, technological language, that sits as a standardized, immutable thing in the heads of creative venture builders and educators and core developers and wallet developers and DEXs, we will probably need them, and other institutions that policy builders, is extremely powerful because it is sort of in a chaotic world. It's a coordinating thing. And it all sort of, it all caters to the same outcomes. And this is what I find so fascinating. If you you help someone be a better agent for the climate, not only as an investor's perspective, but if you withdraw supply, you make this thing more desirable, which means that you help someone to build the methane mitigation plant in Utah, in Africa, in Siberia. So you are a climate activist. You are a climate change mitigator the moment you hold Bitcoin. And it's so crazy if you think about this. So whatever we do, whatever the motives are, we do by doing it, by holding it, by giving this thing value, we incentivize new experiments. We reward new experiments around what proof of work can do to get this transition from a high carbon economy into a low carbon economy done, but by preserving the things that we value so much as liberal societies: freedom of speech, self-sovereignty, privacy to a certain extent, and so on and so forth. So there's an environmental context, there's a social context to it, and that's what makes it this powerful ESG tool that it is.
So you literally answered my final question already.
Did I? Okay.
Yeah, I'd say I ask it, and then maybe we sort of make it in a concise way. But so the final question is, because we spend an hour now, and we could easily spend much more time because it's such a complex domain, or these two domains thought together is really complex, and we need more of this in the future, definitely. But if an investor comes to you and says, I really like this Bitcoin thing, I read about this monetary properties and we have the problems with fiat, and I really think it's a good thing, and I really keen to invest and make something with it. But there is this energy situation, and he wasn't listening to you for the last hour, right? Because who spends an hour? Yeah. And he says, or she says, but this energy problem with Bitcoin mining holds me back in investing. Yeah. What can we answer these people in a short time, in easy language? Yeah. What would be your take based on what we've just discussed?
Yeah, I would say the following. I haven't thought about it in a structured way, but I'm just following your guidance now. I would say I appreciate you thinking about it. I appreciate your concern because it shows me that you are concerned about the future, about our society, and what it could mean to live a regenerative and sustainable future for us as humans on this planet. And I applaud you for that. And because you think like that, I encourage you to study. You need to study a little. Study why energy systems in its current form are so inefficient. Study what is driving economically this transition. Study what are the challenges that arise from this irreversible trend. And then let's study what are meaningful solutions to this challenge. And it's so funny. We can now draw back and go back 100 years. And we can now say, well, we moved from a horse to the car. It's an irreversible trend. But then you are in your car and you can make the same arguments. You can say, now we shift the form of energy from meat or horse, organic, to carbohydrates. You can make exactly the same case. You can say, yeah, but what happens if your car breaks down? What happens if you're out of energy? What happens? And then you can say, well, this is true, but we will solve for that. And I think the hopeful message is, yes, we had a hydrocarbon-based economy which served us really well. But there's a new kid in town. Technology has advanced. And that's a good thing. It has good properties on many fronts. Yes, it's true. We have a couple of real challenges that come with this transition. But once we accept that, then we know that we can solve it. And then you understand that Bitcoin is not using too little energy. Not using too much energy, sorry. It's using too little energy to become relevant as this stabilizer on many ways, in the magnitudes that we need. It needs to become much bigger. So if you're interested in the proof of work innovation around the environmental use cases, study Bitcoin. If you're an investor and you say, well, I'm mostly in for the returns, but if it produces good environmental outcomes, study Bitcoin. If you're an investor that says, I care about nothing else but its monetary properties, still study Bitcoin. Because again, in an inelastic system, every withdrawing of a supply creates a new price balance with increasing demand. But the economics drives those use cases. There is no politician, there is no regulation, there is no subsidy. It's pure economics, incentives, and human ingenuity. And slowly and steadily, we will start to see how this creates a picture that serves humanity better on a social layer, but incredibly well also on an environmental layer. And what I would advocate for is that it needs these financing institutions that service all of that service custody, that service easy access to this asset, but also VC infrastructures like the one that I'm planning to deploy capital into these use cases in a way where we can create a portfolio that gives us a hint and an idea of how this congruent picture can actually look like, that starts to tell the story how climate change mitigation can happen through Bitcoin at scale.
Thanks a lot, Harald. This was a very illuminating and insightful conversation, which I think we only touched the surface of it.
Yes, we did.
I wish you good luck with your entrepreneurial endeavors, and hope to talk to you again in the future. All the best.
Thank you very much for having me. Thank you, Marcus. Bye-bye.
Bye-bye.